the principal loan amount remains the same until cash out, until you sell that property, because we don't pay principal and interest payments. And that's a win for the lender, and that's a win for you. You see, if you just pay or accrue interest, they're making more money, because if you pay them principal and interest payments, you're paying part of their principal down, and they don't have all their money invested in the deal. Interest only payments, if you're making payments and it's not just accruing, are smaller than principal and interest payments. So it helps your cash flow as the real estate investor as well.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Welcome to the Scalable Real Estate Investing podcast, where we discuss the most scalable strategies, tools, and approaches to successfully invest in real estate. Learn how to make the most impact of your time, automate your real estate investing business, find off-market deals with minimum time invested, and leverage your capital to create as many income streams as possible so that you can achieve true financial independence. Thank you for tuning in. I'm your host, Mason Klement. Hi everyone, Mason Klement here. Before we get into today's episode, I wanted to ask you one question. Are you sick of the wild swings in the stock market and ready to try something different? Did you know that investing in stocks actually put you at the very bottom of a company's capital structure, meaning that there's practically 0% chance that you're going to get any of your money back in the event that the company files bankruptcy? So basically, you're putting yourself in the riskiest position for a questionable return. Personally, I hate the unpredictability and just waking up and having half of my investment gone when I didn't do anything wrong. So what a lot of people don't know is that you can actually make higher returns on a consistent basis by investing in the opposite end of the capital structure, which is actually the safest place to be, which is on the debt side in a first lien position. And you can do that by investing in real estate, and specifically investing with my company in notes that are backed by the land that we purchase. So if you're ready to diversify your income stream, go ahead and go over to scalablerei.com and click on Invest in the top right corner. There you're going to find a form that you can fill out to determine if you're eligible to invest with my company, Celion Capital, and we'll be reaching out to you to schedule an introductory call and speak more from there. So thanks a lot, and let's jump into the episode. Hi, Scalable Investors. Thanks for tuning in to another episode of Scalable Real Estate Investing. I'm your host, Mason Klement, and today we have with us Jay Conner, who is a master expert at raising private capital. He's done deals really since 2003, rehabbed over 450 houses. He's worked with over 52 million in transactions. So without stealing his thunder, let's just jump into things. Jay, what's going on? How you doing?
Hello there, Mason. I'm so excited that you invited me to come along here on the show to talk about my favorite subject, private money and private lending. And of course, I learned a few minutes ago before we started the show, you're in Texas, which is where my wife, Carol Joy, is from. So we got all kinds of things in common. Thanks for inviting me to come along.
Sure, no problem. So I'd like to always ask every guest to just discuss their background, their real estate journey, and what got them into real estate and what brought them into today. So why don't we just jump into that first?
Sure. Well, I was actually raised in the mobile home business. I actually lived out in Texas, Wichita Falls, also Abilene, Texas years ago, in the mobile home business. A lot of people call them manufactured homes. Some people call them trailers. So I was raised in helping people own affordable housing. And unfortunately, in 2002, 2003, most of the financing for the retail customer, for the buyer of that product, the financing went away. And the whole industry fell out of favor with Wall Street. Well, I knew if I ever got out of mobile homes, I wanted to get into single family houses, flipping houses, rehabbing them, also, buying them on terms, selling them on terms, rent to own and all that. So that's what I did. I started in 2003 and here in Eastern North Carolina. And today we do 2 to 3 deals a month, 2 to 3 houses a month. but our average profit right now is $74,000 per house that we do on the fix and flips. We're in a small area. My total area that I invest in has only got 40,000 people. But, if you can average $74,000 and do that 2 to 3 times a month, then, that math sort of works out okay. And so the first 6 years that we were in the business, from 2003 until 2009, I relied on the local bank to fund my deals. That's all I knew. I didn't know anything else. I'd never heard of private money, private lending, and all that kind of stuff. And so I tell you, I remember it, Mason, like it was yesterday. January 2009, I had been in the business for 6 years, and I was sitting here at my desk, and I picked up the phone to call my banker. His name was Steve. By the way, can you believe we still have landlines here in North Carolina? Actually, a cord that's attached to a telephone handle, right? Anyway, so I called him a banker, and I had 2 houses under contract to buy, January 2009. I learned very quickly, Mason, that I'd lost my line of credit. I'd been shut down with no notice. And it's like, what in the world? I mean, I didn't know there was a global financial crisis going on until now. I've got a crisis, and I can't fund these 2 deals. And the profits are over $100,000 combined on these 2 deals. And so I sat here for a moment, and I tell you, Mason, I had a new mantra come to my mind that I've repeated to myself ever since that day. And that is, it's impossible to fail unless you choose to quit. It's impossible to fail unless you choose to quit. Well, failing was not an option for me. Quitting was not an option. So I sat here and I asked myself a question. And this is a write or downer right here. Whenever you're running, you got a problem or difficulty. By the way, all the great growth and quantum leaps, personally and in your business, takes place when you're actually going through a difficulty and you're having to figure it out. And I tell you, being shut down from the bank, Mason, was the biggest blessing in disguise I've had in my business. If I hadn't had that experience of losing my line of credit at the bank, you and I wouldn't even be visiting today here on your show. So I sat here for a moment, asked myself, who can help me with this problem, which actually was an opportunity. So I called a good friend of mine, fellow real estate investor. His name is Jeff. He lived in Greensboro, North Carolina at the time. And I told him what had just happened. And he said, well, welcome to the club, Jay. I said, what club is that, Jeff? He says, the club of losing your line of credit at the bank. I said, what do you mean? He said, I lost mine last week. I said, how are you funding your deals? He said, private money. I'd never heard of private money, didn't know what it was. Well, let me tell you something. I went to studying private money very, very quickly. Well, I still had these 2 deals under contract, and I'm not looking forward to missing out on $100,000 in profit. So I learned what private money was. I put my program together, my private lending program, and I started teaching people that I know, people that I had some kind of association with. I started teaching them what private money, private lending was. I started teaching them about self-directed IRAs. And, to this day, I've got 44 private lenders that are funding our deals. And you know what, Mason? Of these 44 people, not one of them had ever heard of private money. None of them had ever heard of private lending. None of them had heard about self-directed IRAs and how you can move, part or all of your retirement funds over to a self-directed IRA company and then loan it out to real estate investors and earn unlimited money per year, tax-free and penalty-free and all that. So I started teaching them, and you know what? By using that process, I was able to raise $2,150,000 in less than 90 days, and I was able to close on those 2 deals. And you know what? Since that experience and that time, I've never missed out on a real estate deal because I did not have the funding.
Okay. Yeah, it's definitely inspirational. And before we recorded, I mentioned that I'm definitely at that point in my business where I have plenty of deal flow and my bank hasn't shut down my line of credit yet, but I still see the bottlenecks in trying to use my own money to shift around. Like, when's that deal going to close? I need that 65,000 to fund these other deals. And, for example, so very great. So in terms of like a typical deal you work on, it's still primarily fix and flip single family houses, or do you do anything else?
Yeah, so about 25% of the houses that I buy creatively on terms. I'll buy them either subject to the existing note, where the seller of the house agrees to sell me the house, leave the mortgage in their name, and I make their payments. You say, who in the world would do that? Well, a motivated, distressed seller that's needing debt relief. So maybe 20, 25% of my deals like that, but the majority of them, I'm paying all cash with private money. And if they need rehab, which most of them do, I like to turn them into brand new properties, brand new looking properties, brand new looking houses. I'm able to get top dollar for those. And so most of them that I'm doing today are fix and flip, funded with private money.
Do you hold any of them to rent out? Are they short-term or long-term?
I'll only do rent to own. So here's my rule of thumb. If I buy on terms, I'll sell on terms. In other words, if I buy creatively with seller financing or subject to the existing note, then I'll sell to it. There's two kinds of rehabs. There's renovation, and then there is rent ovation, right? So if I'm just getting it ready for selling a rent to own, then I just want all the major components to be working, but I'm not going to turn it into a brand new looking home. So when I buy on terms, I'll sell on terms. When I buy with private money, buy all cash with private money, then I'm going to cash out. So in other words, put it in the multiple listing service and sell it, right? So buy with cash or private money, cash out. Buy on terms, sell on terms.
Okay. And when you're selling on terms, are you able to shift some of that renovation capex onto the buyer since it's their property now?
Yeah, because on my rent to own program, when someone buys a home on rent to own, they are responsible for 100% of any repairs and maintenance after they've lived in the home for 30 days. So the first 30 days, it's my responsibility to make sure whatever is intended to work is working. Then after 30 days, it's their responsibility for the maintenance. A rent to own buyer or a lease purchase buyer doesn't have the same mindset as a straight renter. A rent to own buyer, they view themselves as an owner. In fact, we tell them at the closing table, we'll say, for all practical purposes, this home is yours. We just haven't transferred title yet, and we'll be transferring the title when you are ready for a mortgage.
Okay. So when they refi out, is basically what you're saying?
No, because they can't refi because they don't own it. But when they get ready for a mortgage, like they get their credit scores up, and maybe they're needing to wait until they've got proof of verification of income, or they need to save up some down payment, then they will go get a mortgage and finance it and cash me out.
Got it. Okay. But I guess rent on, you're just keeping the deed. It's kind of like a contract for deed.
Yeah, but similar to it.
Okay. I guess technically you're not. I know in Texas, my attorney has told me that's technically not allowed if it's like a straight contract for deed. But if you're doing a rent to own, maybe it's not exactly that, so you can get around that. I don't know if you know anything about that.
Sure. Yeah. In Texas, a lot of attorneys in Texas will say you can't sell on rent to own. However, I've got a good friend named John Jackson. He's easy to Google and find. His expertise actually in Texas is doing rent to owns legally in Texas, and he teaches other real estate investors how to do it. But I've got a lot of friends in Texas that do a lot of seller financing, and they'll also sell with, contract for deed as well.
Okay, interesting. So, we just hit on a little bit of the private money part of things, and I already discussed why I'm feeling I need to, get private money lenders working in my business. But what point do you feel like an investor should start approaching these potential lenders?
Well, here's what I preach and here's what I recommend. The money comes first. So there's always going to be deals. But what I mean by the money comes first is get the money lined up for when you're needing an all cash purpose. Now, I've got some friends that think otherwise. I got some friends that say, get the deal under contract, the money will show up. And I'm going, Where's the money going to show up from, right? I don't want the pressure. I don't want the stress of having a house under contract, and I have no idea where I'm going to get the money from. But if I've got the money lined up and I've got the money, what I call sitting on the shelf, pledged, ready to be used by myself from my private lenders, then how much more confident, how many more offers am I going to make? Mason, I never bought a house I didn't make an offer on, right? How much more confident, how many more offers am I going to make, all cash, knowing I've got a way to fund it and I do not have to rely on the bank? Now, by the way, when I talk private money, I'm not talking hard money. And I've got some really, really good friends that actually own hard money companies and hard money funds. I say establish just as many relationships with as many people as you can. But private money, hard money lender is typically a broker of private money. A hard money lender will go out and raise private money, private capital from individuals. Those individuals will invest in a fund, and then the hard money lender will loan that out, charge points, charge higher interest rate than they're borrowing. So they're making money on money. But in this world of private money, we're talking about how do you find and locate and get funding directly from individuals, human beings, to fund your deals. Instead of them investing in a fund or a hard money lender fund, they're just going to be investing directly into our deals.
Okay. I was just thinking of it. Is it a kind of a benefit to them? Do you think that they would earn a higher interest rate by investing directly with you versus a hard money lender fund?
Depending on who they invest with, they're going to earn about the same amount. So it comes down to who do they want to do business with, right? As I say, I've got a lot of people in my center of influence that have invested, with us, and some people tell me, some real estate investors will say, Jay, all my people are broke. None of my people's got any money. Where can I find it? Well, I'll answer that question when you get around to it, Mason. But, people that you already have a relationship with and they know you and they like you and they trust you, then they're going to want to do business with someone that they're already, know, like, and trust versus someone that they don't. And so being a private lender is a great way to be involved in real estate totally passively. A private lender doesn't have to negotiate deals, doesn't have to find deals, doesn't have to spend money on marketing, doesn't have to, if you're rehabbing, doesn't have to oversee crews, doesn't have to negotiate with general contractors, don't have to sell. They just sit back and earn high rates of return safely and securely.
Okay. Yeah, that is my next question in terms of how do you first go about approaching private money lenders? I guess who is it and what do you say to them and all that? Because you can't just say, give me money.
No, it doesn't quite work like that. First of all, let's start with the mindset. First of all, I've never pitched a deal. I hear real estate investors all the time talking about pitching a deal to a private lender or I've never pitched a deal in my life. I've never asked anybody for money. So how does that work? So let's first start with the mindset and the steps. First of all, I teach people in my warm market, people that I have some kind of connection with. They're in my cell phone. We go to church. We're in the Rotary Club. Who do you play poker with on Thursday nights? I don't know. So, people in your sphere, right? So I teach them what private money is about. I teach them my private lending program. What's the interest rate I pay? What's the length of the note? How are they protected? Right? In case I lose my mind and move to the Caribbean, then, how are they protected in this kind of transaction? So I teach them. So then, and it takes about 20 minutes to teach my private lending program. So when I get to the end of that, well, now they're chasing me. They'll say to me, so what do I do, Jay? How do I start? Do I write you a check? Like, how do I start? Well, no, they don't write me any checks. All they do is they tell me how much money they have to work with. Is it liquid capital? Is it just investment capital? Do they have retirement funds and they're not happy with the rates of return they're getting, out of the retirement account? Do I need to introduce them to my self-directed IRA company that I refer all my private lenders to that have retirement funds? So they tell me how much they've got to work with and where it's located. Then I tell them, I will find you a deal to invest in just as soon as possible, because I know you want to get your money to work, and their money is not earning money for them unless it's actually loaned and secured by a property. So I know how much they got to work with. Let's say I've got Mason, let's say you're my new private lender, right? And you've shown me you got $150,000 and you just can't wait to get started. Let's do a deal. I said, great, Mason, I'll get back with you. It might be a couple of weeks, 2 or 3 weeks before I get back to you, but I'll put your money to work just as soon as I can. Let's say 2 or 3 weeks goes by. I've got a property now for you to fund. And here's the conversation. I pick up the phone. I'm not going to ask you if you want to invest in this deal. I'm not going to pitch you on this deal. I'm going to call you up, and here's exactly what I say. I say, Mason, hey, I've got great news. I can now put your money to work. I've got a house over here in Newport with an after repaired value of $200,000. The funding required is $150,000. And closing is next Wednesday. So you'll need to wire your funds to my real estate attorney next Tuesday. End of conversation. You see, you've been waiting for that phone call. I told you 2 or 3 weeks ago, I'd call you up with a deal just as soon as possible. You've been waiting. Your money ain't earning any money, just sitting in your bank account. So I call you up, and notice what I said. I got great news. And then here's what I told you about the property. This is actually more than you want to know. I've got a house in Newport. I didn't tell you the physical address. You could care less. You're going to see the physical address when I give you wiring instructions to wire your funds to the real estate attorney. So I told you the house is located in what township. I told you the after repaired value. After repaired value is $200,000. I didn't tell you the purchase price. You could care less, right? I told you the funding that's required. Well, that's the amount that you're going to fund on the deal, $150,000. Well, you see, that's my rule of thumb. I'm not going to allow my private lenders to loan out more than 75% of the after repaired value. I didn't say 75% of the purchase price. You see, this particular house, I bought it for $100,000. And so it needs like $35,000 in rehab. Well, the after repaired value is $200,000. You, the private lender, $150,000 is 75% of the $200,000. And then the next thing that I told you was, when it's closing next Wednesday, you need to have your funds wired to my real estate attorney in Texas or other states. It may be an escrow company or title company. And that's when we're going to close. And so you see, in that example, I'm bringing home a $50,000 check and putting no quote unquote skin in the game of mine. I like to keep my skin on my body. Right? So my private lender is going to fund 150% of that purchase price. Someone bring home, who wants to bring home a big check and get paid to buy properties and take no down payment of your own to the closing table? You see how this is a 180-degree dichotomy shift from borrowing money from the bank. The traditional way of thinking is you go to the banker and you get down on your knees and you put your hands underneath your chin and you go, please, Mr. Banker, please, Miss Banker, fund my deal, give me a mortgage, please, 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 please. No, not in this world. I'm not asking, I'm not begging, I'm not chasing. I'm actually giving people an opportunity to have a very, very high rate of return safely and securely. So there's a big difference in thinking about begging and trying to talk somebody into giving me a mortgage versus offering them a mortgage. So that's the mindset part, not chasing, begging, all that. You're teaching. They tell you how much they got to work with. You give them good news. You can now put their money to work. Now you ask, in addition to that, Mason, where do you find these people? And what do you say to them? Well, there's 3 primary categories of where you find private lenders. The 3 categories are your warm market, your expanded warm market, and existing private lenders. So where do you find them? Well, your warm market, these are people in your cell phone. They're on your email list. They're on your social media. They're on your they're a Facebook friend. And I don't mean a fake Facebook friend, but actually somebody you know. They're in your Instagram. your Snapchat, your whatever, And so who you go to church with, right? Etc. And so you make your list, in fact, I teach my students actually how to go through the process of making your list as to who you're going to talk to. Now, are you going to go to lunch with them, or are you going to invite them to a private lender luncheon? I love leveraging my time. I've raised $969,000 in private money at one luncheon. I invited people to lunch. I paid for the lunch. I had my little PowerPoint presentation. I taught them the private lending program. It takes the same amount of time to teach 20 potential private lenders your private lending program, as it does one. So you're in your own warm market, right? Your own connections. The second category of private lenders are your expanded warm market. As I said earlier, sometimes people say, Jay, all my people are broke. I said, well, first of all, I don't believe you, but I just think you're like intimidated, right? So I say expand your warm market, get involved in your community, join the Rotary Club. I tell you where I've gotten a lot of private money is by becoming involved in an organization called BNI. Mason, you've probably heard of it. It stands for Business Networking International. Even our little town of Morehead City has got a BNI, can you believe? Well, you join BNI, you got 20 other people in your group that is singing your song and promoting what you're looking for. So I joined BNI as a real estate investor, and I tell people that I teach people. I'm a private lending expert. And I teach people how to get high rates of return safely and securely. And I'm looking for people that are not happy with either the stock market, the returns, or getting 0.25% at the local bank. So they refer me people that's looking for a place, to invest their money. The third category of private lenders is what we call existing private lenders. Just what it sounds like. They're already loaning money out to real estate investors. Well, how do you find them people? Well, don't start doing it the way I did it in 2011. I hired my real estate attorney's paralegal to search public records here in our local county, looking for individual names on public record, loaning money out that is secured by real estate. Here in North Carolina, it's called a deed of trust. Most people call it a mortgage. Well, in 90 days, we only found 2 people. I said, there's got to be a better and quicker way. So I actually hired some sophisticated software developers, and we started what's called my private lender data feed. In my data feed, we go get every private lender closing in the nation every month. There's about 15,000 of them every month across the nation. And we get their contact information, and we know exactly who and all those private lenders are. You can actually go in the data feed, search by zip code, and locate private lenders in your own backyard. In the data feed, we actually have 2 letters already written to reach out to them to establish a relationship. And I'm not openly soliciting because those letters are written to establish a relationship. Well, where else can you find existing private lenders? Well, I can tell you where. People that have accounts at self-directed IRA companies. Now, Mason, let me ask you this. Do you have a self-directed IRA company that you recommend to your audience?
Yeah, I use American IRA, so that's one that they could use.
American IRA, very good. Yes, so what's so important about having a relationship with a self-directed IRA company is when you talk with someone that's got retirement funds and that they want to invest with you, then you need to be able to introduce them to whoever the self-directed IRA company is that you have a relationship with. Well, guess what? Did you know on average 70% of account holders at self-directed IRA companies are wanting to loan their money out to you, the real estate investor? And so, in fact, just a couple of weeks ago, there was this great big convention at a self-directed IRA company. In fact, right there in Texas, they had 600 people there. Imagine networking with all those people that are wanting to loan money to real estate investors. So you can go to self-directed IRA networking events. And in fact, a lot of them have them on Zoom these days.
Okay. Yeah, that's really interesting. I think it's just a matter of changing your paradigm and lens of how you really see things. And starting to look in the correct areas. That's been probably my problem.
I hear you, man. Well, and here's another thing, like you asked me as well, what do you say to these people? Well, if you're just having a one-on-one conversation, or you're at a social networking event or whatever, there's actually two approaches. There's what we call the direct method, and then there is the indirect method. The direct method is you actually ask somebody the private lending magic question. And what in the world is the private lending magic question? Well, the magic question is, do you have investment capital or retirement funds not paying you a high rate of return safely and securely? Now, a lot of people are not comfortable asking that direct question to someone else because they may be thinking, well, the person I'm asking that may be thinking that's none of my business, right? And so more often than not, we use what's called the indirect method. The indirect method when having a conversation with a potential private lender or just, someone you know. And I used the indirect method on one of my very first private lenders. And here's the short version of that story. It was on a Wednesday night at Bible study at church. Carol Joy, my wife, and I, we went there, walked in the foyer, and I walked up to a gentleman that I'd known for quite a while. And I said, have you got a few minutes for us to visit confidentially after Bible study? And he said, well, Brother Jay, of course. So Bible study goes by, we get together, we walk down to the nursery and shut the door, and here's the indirect method. I looked at him and I said, you know everybody in this town. You see, the gentleman I was talking to was the original Zenith television dealer in Morehead City, North Carolina. That's prior to Walmart coming to town, right? So I said, you know everybody in this town. And he did. He put a television in everybody's house and every room at the hospital and all this and that. I said, you know everybody in this town. And he was very networked in the Rotary Club. I said, you're very involved in the Rotary Club. I said, I need your help. Boy, that's a magic phrase right there. Most people just want to help, right? So I said, I need your help. And then I said, I have now opened up my real estate investing business by referral only. And I am now paying insane high rates of return to people that want to get involved in our business. So when you run across someone that's complaining about the volatility of the stock market, or, hardly nothing they're earning in the local bank certificates of deposit, would you refer them to me? And he says, well, now what kind of rates have you got in mind there, Jay? And I said, well, it depends on the deal. And he said, well, my wife and I, we're only getting, now this was in 2009, right after I'd been cut off from the bank. He said, well, my wife and I, we're only getting like 3% at the local bank in our certificates of deposit. I said, well, that's terrible. I said, are you saying that you and your wife might be interested? He says, well, yeah, because, the stock market's just up and down all over the place. And he said, what kind of rate could you pay? And I said, well, what sounds high to you? He said, well, we're getting 3% in the bank. He says, I don't know, I guess maybe 5% sounds pretty high. That's almost double. And I said, well, I can't pay you 5%, but I can pay you 8%. He said, put me down for $250,000. So that, you see how that indirect method works? I didn't ask him for any money. In fact, I didn't even, get into the private lending program with him in details until I went to him and his wife's home the next day and went over the details of the program. So you see, when you ask somebody to help and just spread the word, if they've got investment capital or retirement funds, they're going to be asking you how the program works.
Okay. Yeah, it's really helpful having a story to really illustrate it. So I guess once that person is lending the $250,000, say it's all in one deal, do they get a first lien position on the property, or how's that work? How are they protected? How do you explain that?
Sure. So how are they protected? First of all, I don't borrow any unsecured funds, right? Whether they're loaning the money to me on a deal from their investment capital, or they are loaning the money from self-directed from their, retirement account, they are going to get, first of all, a promissory note, and then we're going to collateralize that promissory note. Here in North Carolina, it's with a deed of trust. Most people call it a mortgage. So that gives them the right to foreclose on that note if I don't pay them. And, new real estate investors will sometimes ask me, Jay, who in the world is going to loan me money? And I'm a brand new real estate investor. Here's the answer. If you don't pay them, the property does. And of course, they don't want the property. They don't want to mess with the property. But if they did get it, they get all that potential profit, which is they'd be getting more money than they would from the rate of return. So they get the deed of trust or mortgage. And then they're also named on the insurance policy as the mortgagee. You see, you, the borrower, are the mortgagor. They are the mortgagee. They're the lender. Well, the reason that's important is on the insurance policy is that if there's any insurance claims against that property, the insurance company makes the check payable to the private lender and to your entity, your real estate investing company. And that protects the lender because they got to sign off on that check before you get it, right? Before you can cash it. They're also named on the title policy in case there's, any title issues down the road. How else are they protected? Well, I mentioned it. They don't write me any checks directly. They only send their funds directly to the closing agent, whether that's a title company, escrow company, if it's a real estate investor that's doing the closing. They send the funds there, and then funds are not dispersed to us, the borrower. Of course, we always borrow more than we need to buy. We bring home a big check. Those funds are not dispersed to us until after the closing takes place.
Okay. Yeah, that's really interesting. I'm sold. When can I invest?
Well, first you want me to teach you the private lending program, but I know we don't have time for that on the show. How can you get your money back in less than 90 days if you've got an emergency? What are the interest rates that we do pay? What's the length of the note? But I do have I'm so excited about this new private money guide that I just finished writing. In the guide, it goes over those details.
Okay, perfect. Yeah, I have a few more questions. I think I have a hard stop coming up, but for now, I know you wanted to get that out there. People can download that.
Oh, absolutely. Yeah. So it's called, the name of the private money guide is called 7 Reasons Why Private Money Will Skyrocket Your Real Estate Business and Help You Build Incredible Wealth. And this guide will hold your hand step by step, get you started in private money, and it's free. You can download it for free at www.jayconner.com/money guide. So I'm an ER, not an OR. I'm Jay Conner, JayConner.com/money guide. This guide will get you on the fast track to private money.
Perfect. And that's best for like a real estate investor like myself looking to raise private money, right? Or would it also be for, okay.
Who else were you asking?
For the lender themselves, or is it really our job to educate the lender?
Yeah, it would be your job to educate the lender. In fact, I'm in the process right now of writing another book that would be used for the private lender to be educated, that the real estate investor can actually hand out to a potential private lender and let the book be your business card, but I haven't quite finished that one yet.
Okay, got it. Yeah, I think this is really helpful. Just to go back to what you said earlier about the hard money lender, I actually just closed on a $200,000 piece of land that I'm doing a subdivide on, and I paid 3-point origination fee to the broker just for matching this up. But had I had that relationship directly with that lender, I wouldn't have had to pay that. And obviously on a 6-figure deal, it's going to be like, I forget what it was, $3,000-$4,000 I would not have had to pay. But do you pay any origination points to your lender at all, or is it really just
zero? No,
that's way better than what I paid.
No origination fees. It's like it never comes up in conversation. Why should I bring it up? I mean, these private lenders, because I teach them and you teach them, then you teach them the program. And the program has no conversation about origination fees or points. Okay. And it shouldn't. I mean, origination fees and points is primarily how a broker makes their money. Well, your private lender is not a broker, right? It's You're doing business one-on-one transaction between yourself, your real estate entity, and directly with a private lender. So there shouldn't be any broker fees and no junk fees and no documentation fees and no appraisal fees. Normally we don't even get an appraisal. We just work off of my realtor's comparative market analysis. Now, if my private lender wanted to see an appraisal, I would certainly show it to him and pay for it. But I've never, since 2011, had one of my private lenders ask to see an appraisal. So again, it's totally different than doing business, with institutional money.
Okay, got it. So I know you mentioned going down, creating a list of folks to reach out to and joining local organizations, which sounds like a great way to start really spreading your tentacles, so to speak. But are there any other ways that are like some of the best ways to get the word out? For example, like Google PPC or anything like that?
No, you don't need to do that. I mean, you can. I mean, today you can legally actually, go out on the internet. But if you do that, you're limited to borrowing from accredited investors. If you notice, all the different methods I'm talking about involves networking, right? Either networking with your current associations, building your network. And when you do it from the networking standpoint, then you're not limited to accredited investors. I mean, I borrow from anyone that wants to get involved in the program. I've got my minimum right now is 50,000. It's just not really worth it for me to accept smaller amounts. My real estate attorney charges me the same thing to close a $50,000 note as he does a $10,000 note or a $500,000 note. It's the same work. It's the same documentation. So, that's why I limit it to 50,000. I can't use 50,000 to buy a house, but I can use 50,000 to rehab a house. And you can have more than one private lender collateralized, their note collateralized by the same property. You can have a private lender in first position that you use that money to buy the property. And then you can have a private lender in second position, such as that $50,000 note, and you use that money for rehabbing. When you do that, you want to use and calculate what's called total loan to value. So let's go back to that house example I had a moment ago. The after repaired value is $200,000. Well, I could have one private lender in first position at $100,000, and I use that money to buy the property. And let's say they didn't have any more to work with. I could have a second private lender in second position, a junior lien position, with $50,000. So I got one note at $100,000, a second note at $50,000. Add them together, that's $150,000 from both lenders. Take the $150,000 and divide by the after repaired value of $200,000. And so therefore my total loan to value is still not exceeding 75% of the after repaired value.
Okay, why do you use the 75% as a threshold there?
Well, for a couple of reasons. First of all, I want to give a large equity cushion to the private lender or private lenders in case there's a downturn in the market from the time I buy it to the time I rehab it to the time I sell it, right? So prices of homes could come down 25% by using my criteria before you cashed out the private lenders, and you can still make them whole just by selling the property instead of having to dig in your pocket and make up the difference of the amount of money that you borrowed. So it just gives a nice large equity cushion and just keeps everybody safe.
Okay, that makes a lot of sense. And I guess one of the last questions is there any reason that private money lenders may not want to lend you money?
Well, yeah, we've sort of talked about it on the other side of the coin. First of all, they don't trust you.
Okay. Sounds reasonable.
Regardless of your program, unless they trust you, then they're not going to be doing business with you, even if you're giving them collateral. So how do you get people to trust you? Well, it's hard to trust someone unless they are coming across confident about what they're talking about. So you build trust and credibility by knowing your program backwards and forwards. Just duplicate my program, the interest rate, the term, how they're protected, and et cetera. As far as frequency of payments, I let them choose. We can structure some deals where we don't make any payments. And they just We cash them out. They get all their principal loan amount and the accrued interest while we held the money. Right? You got to come across as you're trustworthy, and you know what you're talking about. And you're going to know what you're talking about once you understand what the talking points are of the private lending program. A lot of people are not comfortable loaning money out unsecured. I mean, you can, and it's legal, but I wouldn't do it. So they're going to feel, comfortable loaning money even after they trust you, because you are giving them a security. So why wouldn't they loan you money if they don't trust you? If you're not giving them and they may not give you any more private money unless you make your payments on time. So you got to do what you say you'll do, right? But those are the two main things: having a program that gives them security, makes them feel secure. And the three main reasons that they're going to loan you money is, number one, they're going to make a lot of money because you're paying very, very high interest, to them. The note that they're doing is safe and secure. It is secure because we're securing it with a mortgage or deed of trust. It's safe because it's a conservative loan to value at 75% of the after repaired value. And another big reason that they're going to loan to you is because they don't have to worry about the volatility in the stock market. You see, here's a rider downer. The principal loan amount remains the same until cash out, until you sell that property, because we don't pay principal and interest payments. And that's a win for the lender, and that's a win for you. You see, if you just pay or accrue interest, they're making more money, because if you pay them principal and interest payments, you're paying part of their principal down, and they don't have all their money invested in the deal. Interest only payments, if you're making payments and it's not just accruing, are smaller than principal and interest payments. So it helps your cash flow as the real estate investor as well.
Okay. Yeah, it actually lowers the monthly payment there. That makes a lot of sense. Okay, I know you have a hard stop coming up, so I think this has been extremely helpful. So you've already mentioned jconner.com/money guide. If folks want to download that guide, is there any other way that you want people to contact you if they want to learn more about the programs or anything else?
Well, you know what? They can go to just jconner, JAYCONNER.com, and go to my main website there, and I have resources and tools available. And believe it or not, Mason, we actually pick up the telephone in my office when somebody calls us. So feel free to put in the show notes my phone number, 252-808-2927. That's 252-808-2927. If anyone needs help with private money, getting private money, give us a call. We're here to serve.
All right, perfect. Excellent. I will be sure to do that. Thanks again for your time. This was great.
Mason, thank you so much for having me on. I appreciate it.
All right, that's another episode of Scalable Real Estate Investing. Thank you for tuning in. Please be sure to leave a review and subscribe on whatever channel you're using to listen or watch these episodes. And also be sure to go to scalablerealestateinvesting.com, scroll to the bottom, and fill out the form to sign up for our email. And you could also reach me directly at mason@scalablerealestateinvesting.com. That's MASON at scalablerealestateinvesting.com. If you'd like to get in touch with me to either partner on deals or even be considered to do your own episode on this podcast. Thanks again, and have a great day.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/money guide. That's JCONNER.com/money guide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/money guide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.